Hey, how's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic, I want to discuss with you the difference between an annuity versus life insurance. I'll make this video nice and brief. Essentially, what an annuity is it's a type of insurance contract that protects somebody from living too long. Now, what exactly does that mean? Well, what happens is these two parameters, these two concepts are completely opposite of each other. When somebody has, and I guess an example I could use is, let's say that somebody has a 401k account and maybe it's sitting at $100,000. And this person decides, I'm 65 years old, I want to retire, and I want to start pulling money out of my 401k account each and every year. Well, they could go and just leave it within that 401k or roll it over into a traditional IRA account and keep pulling out this money. Let's say if this person pulls out $5,000 per year and he places this $100,000 in a fixed account, all things being, completely the same, just say that it came back 0% rate of return for the rest of his life. Well, then we understand this person would outlive their money within 20 years. If they're 65, they would outlive this money by age 85. So there's a problem. When this person hits age 85, 86, 87, etc., he runs that risk of outliving those monies. Also, when you have it in a 401k account or a traditional IRA account, the majority of people have that in, they tie it to some sort of risk, something tied to the market. So they run that risk of pulling out money too soon, living too long, and then also having to pay fees and trying to beat out their fees each and every year and deal with downward market losses. So what a person could do is take this account, take like this 401k account or a cash related account, and they could roll it over into a specific annuity contract that will provide them lifetime income, meaning that income, regardless if they live into their 80s, their 90s, their hundreds, whatever the case may be, they will always be receiving a set retirement income or a set income stream every month, every quarter, every half year, every year for the rest of their life. So essentially what a person could do is say, okay, I'm 65 years old, I'm going to take this $100,000, roll it over into the best IRA annuity contract and get provided $6,000 per year till the day that I pass away or me and my spouse pass away. So that's kind of the power of the annuity contract, is protection for living too long. Now, a lot of the things that we specialize on is we want to make sure that you're having control at all times. It's not like a traditional type of annuity where all you're doing is you're surrendering, in this example, $100,000 to the insurance company, and they're providing in a type of insurance, a type of protection that they'll pay you $6,000 each and every year. We like to show certain types of contracts that are hybrid, meaning that it still allows your money to grow whenever markets go up, but not lose anything whenever markets go down, unlike 401k or traditional IRA plans that are tied to mutual funds. So what we try to do is make sure, depending upon your specific situation, if you go and you have lump sums of money, whether that's in cash or whether that's in retirement accounts, you can go and leverage the smallest amount of dollars of those accounts that will produce your specified income goal requirement. So and a quick example would be, if somebody, let's say, needs $30,000 a year for income, and maybe they have Social Security income that's going to be a specific income source, and now they have a specific gap of $10,000 of income. Well, rather than use accounts of, let's say this person has $500,000 total of cash and retirement accounts, well, rather than use the full $500,000 to accomplish that $10,000 goal, what you could do is then roll over a portion, maybe $150,000, maybe $200,000 of that 500, and place it into a specific annuity contract that will provide you lifetime income, so that you're sufficing that $30,000 each and every year until the day that you pass away. You have that umbrella over your head for each time, stating that as long as you keep living, you'll be able to live your retirement with confidence. It's not tied to downward market losses. It's not tied to that risk of outliving your money and living too long. That have unfortunately happened with seniors today, and retirees each and every day. So that's the concept of an annuity contract. So with an annuity contract, somebody's taking a lump sum, they're purchasing an annuity contract, whether that's in an IRA or a non-qualified or a Roth IRA annuity, whatever the case may be, depending upon where those monies are coming from, where that lump sum amount is coming from, is how you have to specify the annuity contract and then which carriers give the best offerings. So you're taking a lump sum to then receive streams of income payments, either on a monthly basis, quarterly basis, semi-annually, or annual basis, but it's going to be smaller income streams. So life insurance is actually the complete opposite of that. It protects somebody from dying too soon. So let's say somebody's in their 30s, 40s, 50s, 60s, 70s, whatever the case may be, what they do is typically they pay a monthly premium or an annual premium or a quarterly premium, whatever that case may be, and they have a nice lump sum amount that will get paid out to beneficiaries in a tax-free manner. So what they're doing is they're paying for this, this premium each and every month for maybe that $200,000, $500,000 protection over their head, that umbrella over their head that says if they pass away, they want to make sure that certain financial needs are met for their loved ones, whether that's an inheritance, whether that's, to pay off a mortgage, whether that's to provide income from them as if they were still living, then that protection from dying too soon. So there's a whole slew of different ways that you could set up your life insurance plans. You could either set it up in a term duration of time, meaning for 10 years, 15 years, 20 years, 30 years, where it's just you have that coverage for that short duration of time. You could set it up permanently, saying if I pass away at 110 years old, I'll always have life insurance that gets paid out. If I pass away in 2 months, I'll have the life insurance get paid out. So there's a whole slew of different types of contracts specific for life insurance plans, and then also specific for annuity plans. And that's what this last bullet point talks about. It says customize for your specific goal. And what I mean by that, and the biggest mistake that's made time and time again, are individuals go into an annuity contract blindly and life insurance contracts blindly. When you do that, that's when you risk so many more dollars than what's necessary than what you need to accomplish your goal. What I mean by that is if you understand you have a specific budget or you have specific expenses that are set up for retirement or as your work throughout your working years, and you understand that you want to have an additional source of income that's coming to you or income sources that are coming to you for the rest of your life, you want to have that peace of mind, well, make sure that you're setting up the best annuity contracts in your particular area that allows you to leverage the smallest amount of dollars with the most amount of benefit. With life insurance, if you have a specific life insurance goal, you want to leverage the smallest amount of dollars with the most amount of benefits. So you want to make sure it's a good quality company, it's set up specifically to your state, and you're leveraging all the top carriers out there. That's where we come in, is we're an independent agency, so we're going to give you non-biased information, non-biased opinions towards which contract is typically going to be your best route. Understand there's a large difference between the annuity versus life insurance. They're essentially the opposite of each other. So when calling in, depending upon what your goals are, we'll try to educate you first and foremost and see whether or not a specific plan might make sense for your specific situation. If it does, then what we do is we utilize something known as Retire Sharp Planning System, which allows us to go through over 1,200 different companies, contracts, strategies, proprietary strategies, and proprietary offerings that we have through a Fossey Financial Group to make sure that we could set up like a perfect puzzle piece your exact goals with your specific situation, making sure that you're leveraging your chips the correct way, you're having full control at all times. We offer 24/7 customer service, meaning that you give us a call mornings, nights, weekends, holidays, whatever the case may be. We are A+ rated on the Better Business Bureau. We've always had very good reviews. We've never had any complaints. It's because of this methodical process, understanding that education has to be first and foremost. You have to become educated. You have to understand everything that you have, where you want to go, how you want to get there, and then we help you fill in those gaps. If you found value in this video, I know it was a fairly quick video, but if you found value in this video, please feel free to subscribe to our YouTube channel, Retire Sharp, so you can have access to the most updated videos. You could also visit our website, Retire Sharp, to watch some more generalized educational videos. My main recommendation is give us a call at any time, ask to speak to a specialist, and we'll have one standing by 24 hours a day, 7 days a week. But once again, my name is Derek Afasi. I want to thank you very much for watching this video, and we look forward to speaking with you. Thank you so much.